Good morning, everybody. It's Chris Blandin De Chalain Education with the 4 majors in this update for the 5th of September 2013. Morning, guys. Okay, looking at the 4 majors this morning, starting with Euro against US dollar, using the FX8 Ultimate template, and our little indicator box at the bottom here to complement that. And let's have a look and see what happened yesterday. So, a lot of selling over the past week or so as price failed to maintain above these resistance highs. However, you can see as prices moved lower, she's found support here on the institution moving average, but also the weekly fib here at the 38.2. So, red arrow, and today's candle is red, however, still above our major support and resistance level in the shape of the weekly fib as well as the institution moving average on our daily. The intraday sentiment very much still negative, and the R squared is complementing that sentiment. The RMO is still flat, and the MACD is below the zero line, however consolidating. So, and this has primarily gone red here because of the fact that prices hesitate now at this potential support area. Notice to be a consolidation area at this level. So for this to still be negative, the euro still to be negative against US dollar long term, we would need to see this area over here at 131560 being breached as soon as possible. And then we could look to target the downside towards the monthly fib here at the 38.2 before we see the long-term support and resistance level down here at 1283 and change being the ultimate target. That stands at the moment now, consolidation at this level, and we are going into non-farm payroll Friday. So there's a lot of news out today, especially for the most important one for the euro market is going to be the minimum bid rate. The interest rates announcement today, they don't expect a forecast. There hasn't been a change for a while, but it's still very much one to watch. We also got this morning, we have the German factory ordered month-on-month figure, which is also very important. Expecting a slowdown there. And the Spanish 10-year bond auction yield, so that's going to be an important one as well. Then this afternoon at 1:30 GMT, we have the ECB president press conference. So there's a lot of news up for euro today. Primarily over the next couple of days, you're going to see a lot of volatility in the markets, a lot of speculation. Non-farm payroll is the first Friday of a new month, and we expect those US non-farm payroll results. And we do see a lot of speculation on the market. So if you are new to trading, I would advise not to trade it, primarily because of the actual volatility. The ranges that you see can be quite substantial, and you could actually lose quite a lot of your capital just by speculating, as I say. So it's rather just to stand aside, wait for the market to give us a truly direction after this Friday, so we can go into a new week, understanding where price is likely to go to, and then we could look to capitalize on that. So if you are trading the euro against US dollar, we are seeing consolidation here. The longer she consolidates above here, the more likely prices are going to head higher. However, as I mentioned to you, there's a lot of news out today and tomorrow, and that news could be reflected in euro against US dollar, and as well as across the pairs, the 4 majors. So very, very important to here just stand aside. Would like to see a nice bullish engulfing candle. You can see that the candle on the Asian session has pulled back. So we had a bull candle yesterday, but the candle in play now has pulled back and has taken all this away. So the sentiment still is negative intraday, primarily because of that. So, but as I mentioned earlier, if we do want to see a confirmed still negative run for this, we would need to see price closing lower. So on a daily, ideally want to see a nice daily candle close lower than 38.2 here, 13,156, or a nice bullish engulfing candle. On to sterling against US dollar. Excuse all the lines here. This is all my analysis yesterday. As you can quite clearly see, this particular pair has also been to the moving to the upside. There we go. Let me just move this so you can see swing highs depicting that. However, as she's moved higher recently, she's failed to really maintain that. The good thing about it is the last time we were above the institution moving average, and this is the only second time we've been above it, but the first time we attempted the institution moving average back here in early June, we failed to see price actually hanging on to those highs. We saw the breakout, the pullback, and then we wanted to see the pullback and close above the 50% retracement on the weekly hour, this red line, which happened to be a price support and resistance level. That failed to materialize as price actually broke straight through it, and that dragged price down quite aggressively over the following week. The same happened here. So we saw price bouncing on the weekly fib, moving higher above the monthly fib here on the blue line, and then getting above the institution. So that was positive. And then we had the breakout, the pullback, and then the continuation. And this is what we wanted to see. And that continued higher up into the price support and resistance level, high above it, pullback, and then continued up into the prior highs that we saw, the breakout highs. However, it failed to really move on from there. And you could see that the MACD, even though we were moving higher through here, you could see that the MACD indicator was pretty much telling us that the slowdown had started to occur However, the good thing is it's still above the institution, which is still a positive sign. However, we're not seeing any, but we're seeing price now reattempting these highs. A lot of indecision here, but over the past couple of days in particular, she's been moving higher. The good thing, yesterday's movement has seen price getting above the weekly fib at the 50%. Now she needs to use this level as an intraday support. That's the way I look at it. So look at the daily. Notice she's broken above the price support and resistance level here in the shape of the fib at the 50% line, which happen to be a price support and resistance level high. So now she needs to use that intraday as a support level. So there we go. I go to my 4-hour time frame. You can see the 15, the 58, 80 mark is my weekly fib, and it's above it. Blue, MACD above, RMO above, institution below. So everything's looking positive intraday. However, we've seen consolidation. We've had a pullback over the past 20 hours or so. That is still above the weekly fib now. So this becomes my intraday support. So now I'm looking for a nice bullish engulfing candle, confirming that there's nice support above here. And then it'll allow me then to target the prior support resistance level highs that we had recently up here at 1569. So I know straight away if she consolidates in and around this area, we could expect the overall target would be roughly around 180 pips. So if she gives me a nice bullish engulfing candle here, it still eats into 50 pips or 40 pips. There's still 60 or 50 pips of profit on the table to be made, which is more than adequate for me. So I just need a confirmation now, because the last thing we want to do is suck it into a trade going long. It's pulled back, and then we get the news announcement out today and tomorrow, and it just pulls everything down again. So wait for the confirmation candle. The overall sentiment intraday is pretty much one of positiveness. There is 1 or 2 areas of red. The R-squared is blue intraday, and the majority of the sentiment over there is still looking positive. So my overall feeling is it's broken above the weekly fib, which is a positive sign. She's making higher swings, which is positive. The institution is below price, which is positive. RMO is above the zero, which is positive. MACD is above the zero, which is positive. MACD is consolidated, but it's still above here, and I know that she can pull back as long as she wants, but as long as she maintains above the 50%, then there's more likely for price to continue higher. Today for the sterling market, we have asset purchase facility figures. That's going to go with the official bank rate. Are they going to continue to hold up their £375 billion purchasing plan, month-on-month purchasing plan? They don't seem to think it's going to change, and they don't see a change in the interest rates announcement as well. That's going to come out at 12 noon this afternoon, and that's going to be a big one to watch. And then obviously this afternoon we also have the US news that I mentioned, the unemployment claims, ADP non-farm employment change. We also have the non-manufacturing PMI results. We have factory order month-to-month results. There's a lot of news, and then plus also to get in the way, we have the G20 meetings, and those G20 meetings will primarily be focused on Syria. I guarantee you, Syria, Greece, Italy, those ones guaranteed, but Syria will probably be the top ones that everyone's probably going to be worried about at the moment. But nonetheless, sterling is looking positive near term. Just got to wait for a confirmed bounce. If we don't see that, and we see a daily close lower than the 50% retracement here at the 1588 mark, then we should be looking downside again, and we could start looking to target the institution moving average again. Price support and resistance level lows here, and there's enough in the tank to see a genuine return on time invested. US dollar Swiss franc, another one. Like the euro against US dollar, we've seen a lot of resistance upside. Here we're seeing a nice support. Price has been consolidating over the past month or so, and doing so, the actual indicator has been painting a picture of positiveness. You can see the MACD straight away. It's converging. Okay, so price is moving back towards the zero line. Support being found. A lot of tweezer bottoms here, confirming that, and the RMO has started to move to the zero, and also been trending above the zero. So we've seen the US dollar finding support, building support, and near term we've actually seen the result, the outcome. Nice bullish engulfing candle above the weekly fib retrace, pullback candle here, and then the continuation. And now she's continued into a price support and resistance level, which happened to be the institution moving average. And you can see right now, as we speak, on the Asian session, the institution moving average has been breached. Okay, so this to be long-term support positive, you can see prior resistance, and we would need to see this daily candle closing above this area here. To do so would go a long way to suffice that we should be looking long-term to the upside, back up to prior support and resistance level highs, or our monthly highs in this fact, way up here above the 96.85 mark and change. So got to see a daily close above here. However, the US dollar Swiss franc, It's end of week, and I'm going to keep referring it. We have a lot of news out over the next couple of days, and the big one being non-farm payroll. So, if anything, by the end of this week, if the US dollar is up against the Swiss franc and above this major support and resistance level high here on the institution moving average, that would suffice to say that for the foreseeable future, i.e. going into the next week, the following week, we're going to see a lot more, or we should be looking for further highs for the US dollar against Swiss franc. Last pair of the day, the US dollar Japanese yen. Here again, like its counterpart, we've seen the US dollar finding a bit of support near term on the institution moving average each time she's fall back. We had swing high, swing high, swing high. We've actually had a break of that. However, you can see that price now traded tentatively into the monthly fib. So this is another hurdle that price needs to get above. And the sooner she does, the more likely price is going to head up back towards these highs over here and complement or reattempt the prior yearly high, which is happening up here in May of this year. So near term, you can see three consecutive resistance level days, which is the monthly fib here, as well as the daily 61.8 mark. So there's a lot of resistance above price. We do need to get above it, and you can see the indicator box is primarily looking for upside. RMO is above the zero line. MACD is clearly above the zero line. MACD has clearly been above the zero line for a number of a week, in fact, a week and a half, as price has been building on it. So you can see a lot of negativity, but then bounce, and then we saw the MACD getting above here, and it has spent all this time above here as price is consolidated. And as long as she's traded above the institution, there was always going to be a likely for price to bounce, and that positiveness has bounced through. So near-term resistance level in play at the moment now in shape of the monthly fib as well as the daily fib. Got to get above it, guys. Rather give it a day. If the daily gets above it, that could do a lot to actually show us trend direction, show us where sentiment lies, and then we can actually use that. Because at the moment now, you can see quite clearly prices bounced. We have a blue arrow, blue candles. The only thing that's stopping us from taking this trade in my eyes is the fact that we have a current resistance level here. We have 1, 2, 3 consecutive days of resistance here. It's far too risky to go in now, only for price to potentially fall low because of the resistance at the moment. So I'd rather wait and see a confirmed close above, then trade the outcome. Okay, so that's it, guys. Short and sweet. Done all done the 4 majors for this morning. Please be aware, as I mentioned, there's a lot of news out today and for tomorrow. So if you are not trading, rather stand aside and see what happens when the markets are faced with a lot of data for any newbies. It's good. This is a good learning curve. And then you can see, as I mentioned, there's a lot of pairs that are at major support and resistance levels. We want to see confirmed directional candles, sentiment candles. Could the news that's coming out today and Friday be that catalyst? Rather be patient, wait for confirmed trend direction, and then trade the outcome. Don't speculate. Don't fall into the speculation bracket. It's very easy to. When you start looking for trades and you start just getting into trades for the sake of it, rather be patient. That's one thing you need to learn as a trader, is to be patient. Wait for the confirmed breakouts. Wait for that genuine sentiment to come to the table. When you see it, you will realize what the potentials are, and your profits will be far greater. Okay, so take it on board. Also, if you are using this particular template or any other template, please back it up with sound money management rules. Very, very important. Don't expect huge returns on a small account. You've got to gradually over time build your account up. The more money you come to the table with or trade with, obviously that allows for a bit more room, flexibility. If you don't, however, you're going to have to keep it as simple as possible and just take time. And it's far better that way, to really get to understand how price action works, etc. Other than that, I'm going to leave you to it. Hope you have a fantastic trading day, and I'll catch you guys for non-farm payroll. Until then, you guys trade serenely.